seen. But for now, let's invite Vikas Pershad, Portfolio Manager, Asian Equities at M&G Investments on the show now. Vikas, thank you very much for joining in. Looks like there's one step forward towards a peace deal between Ukraine and Russia. Would you read too much into it, or we've had too many of these blow hot, blow cold kind of narratives?
Rima, good morning. It's always nice to be back. Blow hot, blow cold, perhaps, but it seems like we have made progress. We're nearing the 4-year mark now in this conflict. I think the market, if you look at it, the market is starting to price in some sort of a resolution here, whether it's the oil markets or equity markets, which continue to be quite resilient. I know we've seen some turbulence in tech-related names over the past few weeks, but broadly, markets are much higher and they have been much more resilient this year than one might have expected had somebody told us on January 1 everything that was going to happen.
Vikas, hi. So the biggest question, I think, of the month has been whether the AI trade is still intact, or is it winding down? So is it time to look elsewhere and diversify the portfolio? And that has a huge bearing on us sitting here in India, right? What's your sense?
Well, if we start in India, and then I'll go more broadly, we don't have the Mag 7, but after nearly 1,000 listed new listings in the past 4 years, 1,000 IPOs, we have nearly 7,000 listed companies in India to choose from, which is heaven for an active manager. So while we might not have the Mag 7, we have the Mag 7,000 available in India. We might not have the AI trade yet. We're starting to see some aspects of that manifest themselves in some of the companies that we have. But every other sector that you can imagine is there. It's a very broad and deep market. The setup heading into 2026 is quite positive. You said some of the things that I can now build on in the previous segment, that banks, some of the laggards that we've seen, small caps are positioned well heading into the new year. I just came back from a week in India. There's nothing that changed my mind about the long-term growth trajectory. What do you want? You want long-term economic growth. You want political stability. The election results from earlier this month highlighted both of those things. And as an active manager, you have a lot of choices. The ECM activity, capital markets, continues to be buoyant. Now, more broadly, when it comes to the AI trade or the tech trade, we spend very little time thinking about whether there's a bubble or not. In markets, there's always a bubble somewhere. But what we look at is a very long-term growth opportunity in hardware and in software around the world.
Hi, Vikas. Morning, and good to see you, Ben, as always. Well, you have been largely constructive on China. I recall in our last few interactions. What about the toss-up between India as well as China? Because year to date, China continues to outperform. I think ballpark, they're up 15 to around 17%, while Indian markets are up close to around 10% or thereabouts in local currency terms. However, in the last 1 month or so, China and India, that trade has become encouraging because from an India perspective, because India is up 2%, China is down close to around 2%. Do you think India can get back to its outperforming ways, or do you believe there's still enough of juice, in China with regard to valuations, with regard to the money that is, sitting at the sidelines and the stimulus that's likely to come about?
Well, Nigel, the benefit we have as a pan-Asia investor is that we can make different strategic bets across different strategies. Yeah. In our Asia ex-Japan strategies in recent days or recent weeks, we have indeed reduced the underweight that we had in India. In the India strategies, we have been fully deployed throughout this year, just like last year, heading into next year. That is the same. I continue to believe on a long-term view, and long-term meaning more than a decade. Just as we've seen over the past 2 decades, India remains perhaps the best long-term equity compounding story in the world. As a pan-Asian investor, however, we still like Chinese equities. We didn't mention South Korea. That market has been wonderful for equity investors this year. Japan also. We're very constructive on all these markets. We make our bets bottom up. Yes, of course, we pay attention to top-down exposures by countries and by sectors as well, but we see opportunities all across Asia. The broader point here is the divergence we have seen between the US and the rest of the world, or the US and Asia. Broadly, if you take out India over the past 2 decades, we think that will continue to converge. And this year we saw that at the beginning of the year. Then the AI trade was helped keep the US markets quite buoyant. But over the next few years, there's a lot of opportunities all across Asia, perhaps in India most of all.
Okay, all right. Just a quick question, since we spoke about AI and tech as well. I think you had an underweight stance on Indian tech. That seems to be getting some interest finally. It's been a rank underperformer year to date, last 1 year, last 18 months as well. But what's the view right now? You continue to hold the underweight stance?
Largely the same. We have lessened that underweight somewhat, partly because of the underperformance, and also because the earnings results from the companies that we had positions in, they were constructive, they were favorable. So we have, rather than add new names in the sector, we have added to existing holdings at the margin to lessen that underweight. But when you look out 1 to 2 years, the earnings headwinds remain. Now, the question is, what multiple do you want to pay on that? If you look over the last 10 to 15 years, going back to the GFC, the forward earnings multiples for Indian IT services companies are still above where they troughed in previous down cycles. So even though they have underperformed, our focus is on prospective earnings. Also, what I should add is, as a long only, as a team that is always fully deployed, if we want to buy something new, we need to sell something. And relative to reducing the underweight materially in IT services, we don't see reasons for that yet, to take away from existing holdings that we prefer even more.
Okay, Vikas, great chatting with you. Thank you very much for joining in.